Hello and welcome to Gregory Santana Trading December 16th. Butterfly trade PG exited at 513%. Let's go look at that chart. Okay, first here are the numbers. This is the exit. You can see that this is a real live account because in charts it will be gray. If it's an simulated account, it will be a yellow. So we are in a real account. We hit 56,642 and we have 2,500 in buying power. And here is our monitor for the day, and here is our trade. This is PG, exited right here. There's the exit right there. This is the entrance right here. This was 7 days ago. And this is a butterfly trade. What's a butterfly trade? A butterfly trade is where you buy a combination of positions in an option, and then you get a blended cost. This was a $22. 22 cents times 100 because it's one contract is still 100 shares. It's the $22 into the trade. Got 135 back. And this was only one setup. I could actually, if I scale up, I can make this just double the numbers, triple the numbers, four numbers, whatever. The bottom line is that this is an experiment to see about my new trading plan and see how it works. Now let's go ahead and confirm the percentage. So we got out with 135 right there. Minus 22 right there with the debit, leaving us a net of 113 divided by the cost 22 as a percentage, and the return is 513.6. The point comes down is at $113. Had I done 10 units, that would have been an $1,100 return in 7 days. And that's it. What the butterfly trade is, a trade that you have to be very precise on the expiration date along with the target. So now let's go look at the chart. Let's go look at the chart. There is the chart. And also PG exited real quick, like to review. We had a PG long call on my channel breakout of 5, and the trade was only till December. This is the December trade, which expires tomorrow on the 17th, but we're already out of the trade because why? We had a target. We had a target trade of getting out at 160, right? With 150, with 100. We got out of the trade on the 13th with 245, 621 per turn in 7 days. That was a single call trade, entering here on the December 6th. It was triggered on December 6th, which is right there, December 6th. We set the trade up here on Friday the 3rd and got triggered on Monday the 6th, and then we got exited out here on the exit on the 13th, and that was a 245% return for the 621 on the net profit. Net profit against the 727.98 that it owes. For those that don't know, I carry forward my losses. So 27.98 gave me a new O of 21.77. That's what makes my next carried loss. Now comes the butterfly trade. So we also put a butterfly trade in here and said that the price will reach $160 prior to 17th of December. There's the 7/12/16. You can see the date right down here. And it hit the 160 today. I got exited out of the trade, and here's the butterfly. The butterfly, the cost was estimated at $55 for a $228 return. And actual cost came out to $22, and we exited at 135. So 135, that's why it comes up to 513% in 7 days. You saw the calculator. And then that left us a 113 minus $2 in fees, a 111 net against a 21.77 owed. We have now a new O of 20.66 on PG. And that is the result of a butterfly trade. And what a butterfly trade is that where do you think price will be in 1 to 2 weeks? That is the secret key to butterfly trades. And I had the most difficult time saying, how do I know where price is going to be in 2 weeks? Well, that's where you've got to do your testing and your studies and your applications and knowing your indicators and then being able to come up with that kind of a crystal ball. But what I like about butterflies the most is the return ratio. I mean, this is a straight call. This call was three contracts at 84 cents, which is $84, because one contract is 100 shares. That comes at about $250 thereabouts. And we got out at 245%. We got back 621 in 7 days. But the risk factor, of course, is I'm risking over several. I was risking about $250. Here on a butterfly trade, the risk is very low. Was only $22 with a higher expectation of the 513 return in its 7 days of its run. So this is what's the advantages of butterflies, is that butterflies are very cost effective and butterflies are very highly rewarding. The difficulty is we all need to be able to say where is that price going to be in 2 weeks and then take that shot. And again, the great part about butterflies is if you're going to lose $22 against 135, so that's about a 5-to-1 ratio. So you're going to shoot 5 times, and all you need to hit once, and then you break even out of 1 out of 5. You win 1 out of 2. You win 2 or 3 out of 5. You're making gangbusters, and that's what the excitement is about this butterflies. So that's the butterfly trade, and that is the results that we had. 515%. Granted, we're going to put more contracts, more money, but the point will be is that once I solidified the foundation and my trading experience with butterflies, then I will be upscaling my contracts. And with that said, I thank you very much for stopping by and checking it out. Catch you on the next one.